in my capacity as the advisory board member that I get the opportunity to nominate speakers to do a board talk. And in this case, I have nominated a dear friend of mine, Eric Ries. Eric, welcome. I'm going to tell the world about you briefly. Eric is a multiple-time entrepreneur. He's built many companies, also is a New York Times best-selling author. He wrote the book, The Lean Startup. It's sold over 1 million copies. It's probably been published in many languages. And he is the creator of the Lean Startup methodology. And he is also the founder and chief executive officer of LongTerm Stock Exchange. And we're just thrilled to have you here, Eric, to talk about the future of finance, the future of long-term investing. We both are at organizations that have long-term in the title. We'll just jump right into it if you don't mind, Eric.
Yeah, absolutely. Of course. Thank you for having me.
Beautiful. It would be interesting to hear your personal story, how you got here.
Yeah, and thanks again for having me, and always good to see you, albeit virtually this time. So, gosh, where to start? So I'm a computer software guy. If you have a stereotype in your mind of the kid who grew up in their parents' basement programming computers, that's totally me. I did that. My parents were concerned that I didn't get enough sunshine and didn't have enough time playing outside. Okay, that was me. But unlike people who wanted fame and fortune out of entrepreneurship, to me, it just seemed like an even better way to build more awesome technology and have a job where I could have even more impact. And the only tiniest little itsy bitsy glitch in my grand plan is that the way that we sell entrepreneurship, and especially to young people, where you just basically create something awesome and then you get to be on the cover of magazines, it lies over the fact that most startups fail. And even the ones that do succeed, there's a lot of really boring stuff that you have to get right in order for the company to succeed. So I kind of had my dreams dashed over and over again. Entrepreneurship was like a repeated kicking in the head of the fact that if you just build great technology and that's all you do, it's not sufficient to get the outcomes that you want, as you well know. But this is around the time of the financial crisis. There was intense interest in new models, especially new models of entrepreneurship. And lean had come back into fashion after, a decade, a very high burn decade. And all of a sudden, my life changed. And people started asking me to speak and work with their companies and go all over the world and talk about lean startups. So anyway, I wound up writing a book. As you mentioned, the lean startup became a huge global phenomenon in 2011. Now, this might seem a very far cry from financial services. And it really is. Again, I started to get more educated and I started to meet actual investors. And of course, investors would say, we're not the short-term ones. We're not the ones doing that. Management's out for themselves. And let me tell you about how executive compensation is out of control, and et cetera, et cetera. And it just seemed really obvious to me that I wouldn't have been able to put it in these terms at that time. But we have built a financial system that is dominated by transaction volume. The vast majority of intermediaries make their money by transaction volume. And what generates more transaction volume is chaos, destruction, volatility, insanity. So these kind of crazy M&A adventures that companies go on, and these ridiculous perpetual reorgs and having 10 CEOs in 5 years, all the chaos is very good for volatility and transaction volume, but it's not actually good for fundamental value creation. It's not good for the employees of the company. It's not good for their customers. It's not good for any of their other stakeholders. And anyway, what I realized was that we had basically a disconnect where their interactions between companies and their actual investors, the true owners of those equities, have become so intermediated that we've allowed middlemen to write all the rules and to design the system. It's like a classic tail wagging the dog kind of system. And I didn't know the solution, but it just seemed to me, and I wrote this in my book 10 years ago, more than 10 years ago now. I just said, look, from first principles, even though I didn't know anything else, from first principles, it seems to me like those companies that actually have a long-term operating philosophy and those investors who have multi-generational timescales ought to partner together to make more money. We don't need regulatory reform. We don't need, all we need is a mechanism by which those two stakeholders can come together and partner together to make more money. And I was like, am I crazy? Is that not a stock exchange? An institution that can regulate the behavior of investors and managers at the same time. So I wrote in my book, somebody should really create a long-term stock exchange, or LTSE. that would work this way. And I sketched out how it should happen. And as far as I was concerned, that was my first and last foray into financial services, and I can get back to my life.
I think it's very true to say that on both ends of that capitalist system, you have actors that want to be long-term. And
Yeah.
so then let's talk about the long-term stock exchange as this thing that you've built.
Yeah, boy, this has been, as you mentioned at the top, when you put long-term in the name of the company, you know you're going to be in for quite a ride. So this has been a grueling project to work on. We first raised money for the company in 2016, and people sometimes were like, well, what were you doing for 5 years? But no joke, that's how long it took me to figure out that this was even possible to do. And in all those years, I kept expecting I would find someone who wanted to build this thing instead of me. Because I didn't feel like I was not the right person to do this. I don't have a background in financial services. And frankly, I liked what I was doing before quite a bit. So I wasn't like looking to do a new thing, but this idea would not leave me alone. And the more I talked to people about it and asked them why it would never work, and the more people told me that it would never work, but for terrible reasons, the more convinced I was. I was like, I'm onto something here. There's something here that's worth investigating. Took us 3 full years to get the regulatory approval to operate the exchange. And I won't bore you with the ups and downs and all the stuff we saw in DC. Like, it was a very eye-opening experience to go through that. Got what's called the Form 1 approval in 2019. We raised our Series B then. And then it took us all that time from then until now to get the exchange open and get the first listings. So we are now a national securities exchange. We're in the same regulatory category as NYSE and NASDAQ. And although nominally there are 15 other US stock exchanges, the truth is the majority of the trading volume and all of the listings in public equities are really dominated by just the 2 players that have had this duopoly for so many years. So this is actually the very first new public listings venue with its own distinct governance model that's been created since the creation of NASDAQ in the early 70s. And for the first time in 50 years, we have a listings venue that has more than 1 listing on it. So we have 2.
Wow. Of what those companies are, expressing by listing on the LTSE.
Yeah, so we have a set of principles that we stand for, and they're all things that we've been talking about in this community needing to do since forever. Long-term compensation for executives, long-term compensation for the board oversight of long-term strategy, sustainability, diversity and inclusion, treating the long-term investors as distinct from the short-term investors, and of course, having a multi-stakeholder philosophy of business. So every company that lists on the LTSE is required to make commitments to those principles. Now, as soon as you hear that, you're like, oh, another press release. Great. That's what we need. Companies put out another press release about how great they are. I mean, that was the last time you read an S1, from a company going public that didn't have all these keywords in it. But if you look carefully and say, okay, I see the promises they're making in the founder's letter. Let me read the rest of the S1. Let me look at the charter. Let me look at their corporate structure. Let me look at how the company is governed. Are those promises reflected in the governance? Of course not. And if they're not reflected in the governance, why on earth should I believe them? Hold on. We want companies to be able to win the public's trust by making promises that people can believe. That's really what this is about. So when a company lists on LTSE, they are making a binding commitment to a set of policies that implement the principles that I've just described. Now, it's not a one-size-fits-all checklist-based approach. We call it principles-based listing standards. But the commitments are just as binding. They have actual bona fide penalties, and they are declarations of how the company is going to be governed in the future. It's a competitive advantage to, first of all, be able to make such commitments and have all stakeholders believe them. And then for this conversation especially, it is a major source of competitive advantage to have long-term values-aligned investors on the cap table who can support and protect the development of that purpose over time.
And so I would expect the performance of these stocks would actually be higher. Have you? I'm sure you haven't seen that yet, but is that part of your kind of assumption set?
Listen, when we did research, the 2 things that really caught my eye when we were developing this. One is the research that shows that companies that have that philosophy and are governed in that way, way dramatically outperform the market. Is like, we did some research of our own, but that research is well established in the literature. And
yeah,
I think even still is underappreciated because we've had such a race towards diversification, and passive investing is kind of like one of the mega trends of the last few years. Like, I think we've kind of lost sight of the fact that companies that are actually creating value are really just a fundamentally different asset class than companies that are coasting and extracting value from the good choices they made in the past. And I'm not here to say that, you know, no one should make money from exploitation or extraction, just to say that that's a different thing. And if you look over long enough time horizons, that's where the returns are. Plus, for those of us who are planning for our society to exist decades from now, let alone thrive, those are the investments that need to be made in order for our civilization to be preserved. So I feel like there's a double benefit to making those investments. You know, that you obviously get the superior returns, but you also feel like you're part of creating the reality of the future that your institution is meant to inhabit. So that's an advantage that long-term investors have, you know, over short-term investors. And the second thing, and this is a little more surprising to me, is that if you take the exact same company and do nothing else but swap out some of the short-term investors with long-term investors, you instantaneously make the company more valuable. You drive volatility down like 30%. You drive short interest down instantaneously. And that doesn't seem like a big deal, but then that has major implications for the performance of employees. And obviously, because companies use stock as a compensation instrument, it has way different effects on the company's willingness to invest in R&D, for example. You see that in the data really clearly, and there's been some pretty clever studies to tease apart those effects. So it's not just finding the good companies and weeding out the bad companies. I wish it was that simple. Like that's a kind of a childish black and white kind of view of this. It's also about pushing companies in the good direction and away from the bad direction. So like we are like the corporate conscience, if you will, of these super organisms that are trying their best to do the right thing, but are under constant pressure from bad actors to do the wrong thing. I just saw this yesterday. People, the main thought leaders in the venture ecosystem, in the private company ecosystem, the people that CEOs look up to the most, are constantly putting out a message now that you should not take your company public. Either don't do it at all. That was one of the big thought leaders was yesterday. They had a whole thing about don't take it public at all, or delay it as long as possible. So at the point that we've made being public so relatively unattractive that that's the advice that entrepreneurs are given, that's bad. Like that's bad for pensions. That's bad for
sure.
Not in the top tier venture funds. And even for those who are, people are paying a huge premium to access companies that in any other era would have already been public and you could have had low cost access to. So yes, I think to the extent that people are willing to put their money where their mouth is to say that they want this to change, that's the first step. You know, like I said, I've done the analysis. Like I've seen everyone's investment philosophy and all the principles that they sign up for. And it's like, okay, if we could take action, like this is a community that has tremendous power. If it was willing to exercise that power on behalf of this problem, could make a real dent in it.
Let's shift gears and kind of reveal a little bit about you. You know, you've built multiple big companies, you've taken on this monumental challenge. And I think it's always interesting for people to hear a little bit about like what's happened in your life. And one of the questions that we often ask is around like the best and worst advice you've ever got, either in your life, if you really want to go to that level, or in the process of building out LTSE. What is the best and worst advice you received?
I think the best advice I ever received was to realize, and this is really hard to do, easy to say, very hard to do, but realize that when someone is giving you feedback, they're giving you information about themselves and not about you. So like I've probably had 1,000, 5,000, I don't know, I have no idea how many thousands of conversations I've had with people who are far more knowledgeable than me about LTSE, about capital markets, about going public, about, you know, like I've pitched the company millions of times. I have counseled founders. I've spent a lot of time in this world just talking about this idea. And I would say this is a very polarizing idea. So for every person who thinks it's just the most brilliant, awesome thing they ever heard, there's also, you know, several times as many people who thinks it's pretty much the stupidest thing they've ever heard. So I used to think, okay, I gotta be tougher and build that hard exterior, become cynical and crusty, and you know. And this advice really transformed it for me. It was like, no, actually, every person is just revealing to you what they care about, what they like, what they want. And they might be right. They might be like, when they're telling you about you, they don't know who you are. They don't know or generally care about your inner reality. They're just saying that like, I want this. This is what I'm looking for. And that ability to parse feedback in that different way was absolutely essential to building this company. I would have gone crazy without it. So I think that was the best advice that I got.
That's great. Worst advice?
Probably the worst advice. I don't know. The jury's still out on this one, okay? Because it all depends on whether this was actually a good idea to spend some of my life on this project or not. But the worst advice I got, when I first started talking to people about this, almost every advisor I took it to was just like, this is not the right project. They always be like, this is an old man's game. Do this in retirement. When you're done with your career and you want to go, lecture and pontificate about long-termism or whatever, go ahead. But like, don't waste the prime of your career life on this crazy errand. And I mean, listen, if this all turns out if this ends in disaster, maybe I'll look back and be like, actually, it would have been a good retirement project, not this. But I just feel like in our world, there is this tremendous cynicism about whether reform is possible. And just, the majority of voices for reform are like people that are retired. They're people at the end of their career, or they're people, who are not really in a position to like push for the reform directly themselves as their job. They're kind of like, listen, kid, I'm just here to tell you how it is, based on my experience as a CEO or as an investor or whatever. And I don't mean to denigrate people at all. I think that wisdom is extremely valuable. I've learned a lot from those people. I call many of them my mentors. But I do think that there's kind of a lack of willingness for people to actually really engage with their actual career in the project of reform, especially at a time in the world when it's so urgently needed. Like, our civilization is actually falling apart at the seams. I'm sure people have noticed. So like, I mean, it's like, this is actually a critical time for us to make this transformation, this leap in consciousness from a more extractive to a more generative mindset. And so I think many people, and I'm sure even many people listening to this, like, you could be an advocate for these changes right now in your current job. And like, maybe there's some risk in that. Maybe, I'm not here to say that it will be an easier life path by any means. But I think when we all get together after we're all retired and we're all having a drink and talking about what we accomplished in our lives, I think those of us who make that leap will be proud to say, like, we at least made an attempt to steer the civilization onto its right course. We elite privileged few who had access to the levers of power, to the decision-making authority. We used our voice and our privilege and our power to try to make change. And so I hope more people will take up that challenge.
Thank you, Eric. And we're not done, but I just still wanted to say thank you for dedicating for dedicating your life to this work. I think it's ultimately why I invited you on here. I think it is inspirational. And to give you some credit, I mean, when we first started working together 4 years ago, like, it was a pretty crazy idea. But I'll tell you today, like, people, when I would tell them, they'd be like, they'll never get a listing. Maybe they'll get their Form 1, maybe. A lot of people were dubious. But they'll never get a listing. And you have two. And there's another one I've seen in an S1 filed. So there's others coming.
Yeah.
And so I think you've already demonstrated, it's like some novel concept of a bureaucratic entrepreneur, or the ability to think very creatively in environments where creativity is scarce. Like, you've been a role model for me in trying to work, for example, with public pension plans to build innovation units or R&D units. So I'm glad you ignored the bad advice not to do it. And we're very grateful, Eric, for you coming. The work you've done over the years is astounding, and it's amazing because it goes from all the way the world of startups with the lean startup and building innovation mechanisms, all the way to bureaucracy and administration and kind of trying to reconcile the rules of the game.
Full stack, baby. That's why they call it full stack. That's the key.
Full stack.
That's awesome. Thank you all very much.